In this video, we are going to create an example chart of accounts, demonstrating what accounts you may need for a small service business. In this case, a sole proprietorship, using the cash method of accounting. We won't be going into detail about any of the features involved in creating new accounts. However, these features are explained in detail in our Create New Account screencast, as well as in their individual help text on the Create New Accounts page. We will instead cover the process of creating a new chart of accounts, demonstrating what type of accounts go where. When creating your chart of accounts, feel free to use the example accounts that you need and drop the ones that you don't. Name them how you wish and be as specific as you wish in regards to the accounts you use. Let's start creating our accounts, starting off with current assets. So we'll go ahead and make our bank account. And one way to name your bank account is to abbreviate your bank name and add the last 4 digits of your account number. So that's what we're going to do. This is for current assets and debit to increase. If we expand the cash flow key, we'll see under operating activities, increases in current assets decreases cash flow, excluding cash accounts. So this will not be applicable for this account. This is not a depreciable asset, so no. And we'll save. We'll go and create our PayPal account. Current assets, debit, no. Petty cash account, supplies inventory, now if we expand the cash flow key, we'll see under operating activities, since this is not a cash account, increases in current assets, decreases in cash flow is applicable for this account, so that's what we'll choose. Operating activities and decrease for the effect on cash flow. This is not a depreciable asset, so no, and save. Moving on to long-term assets, we'll go ahead and start with rental equipment. And if we expand the cash flow key, under investing activities, increases in long-term or fixed assets decreases cash flow. So that's what we'll choose, investing activities, and decrease. This is a depreciable asset, so we can choose yes and save. Since we enabled auto book depreciation for this set of books, Flowlog automatically created and commandeered our depreciation account for rental equipment. We also describe auto book depreciation in the Create New Account screencast, as well as in Flowlog's documentation. Let's go ahead and create our equipment account. For long-term assets, debit, investing activities, yes, and save. Furniture, vehicles, save. Now moving on to long-term liabilities, we have truck loans, credit to increase. Expanding the cash flow key, we'll see that in financing, increases in long-term liabilities or debt increases in cash flow. So we'll choose financing activities and increase for the effect on cash flow. This is not a depreciable asset, so no, and save. Business loans. Credit. Financing activities. Now for equity, since books auto close is enabled for this set of books, owner's capital and owner's drawing will be created automatically. If you do not enable this feature, you'll want to manually create owner's capital and owner's drawing accounts, assuming sole proprietorship. Let's move on to incomes, starting off with direct incomes. If you want to know more about direct and indirect incomes, you can check out the help text for each category, as seen here, and I'll explain a little bit about what is direct and what is indirect incomes. So let's go ahead and create our accounts for direct incomes. Field services, credit to increase. The cash flow statement category will not be applicable for this account, and this is not a depreciable asset, so no. Shop services. Consulting services. For indirect incomes, we'll go ahead and create our long-term asset sales. For indirect incomes, credit to increase, and no. For direct expenses, we're going to start with our parts or suppliers account. Direct expenses, debit to increase. The cash flow statement again is not applicable for this account, and this is not a depreciable asset. We have our fuel account. Debit, not a depreciable asset, so no. And since we have auto book depreciation turned on, Flowlog automatically created and commandeered our depreciation expense account for us, as you can see right here. Let's go ahead and create our rented equipment account. Direct expenses, debit, now for indirect expenses. Now that we have indirect expenses, these are expenses that are part of the business but not directly part of the product or service you're selling. So we'll go ahead and create our insurance account for indirect expenses. Debit to increase. Not a depreciable asset. Maintenance account. Oops. Fix that real quick. Debit. We can create a fees account. Not a depreciable asset. And save. So here are all of our accounts that we have created. So this is our example of what a small service business chart of accounts might look like. We hope this gives you an idea of what you need to do for your chart of accounts, and thanks so much for watching.